Today, I'm going to be sharing with you guys a topic that not only changed my win rate, but absolutely revolutionized the way that I saw the charts once I fully embodied it. So without further ado, let's just open our minds a little bit and sit down and get ready for some charting knowledge. On the chart, we need to be viewing the chart with 3 time frames, right? In our mind, obviously we have all of these time frames, 1, 5, 15, 30, 1 hour, all this stuff, right? But we need to be viewing the chart through pretty much 3 scopes, right? Our bigger time frame, and we're going to run through examples after this, right? But our bigger, which is like our daily 4 hour, 1 hour, our intermediate, which is our 5 or 15, and then our execution time frame. Whatever that might be, that's pretty much for most people going to be our 1 minute or 30-second, right? And the whole key behind this is time frame alignment, right? That's what we want our trades to be confluenced by, is great time frame alignment. We want all of our time frames to be aligned so that when we take the trade, it is the moment that we enter that the trade starts to speed up and run to take profit. Because why would I be trading against the bigger time frame draw? Why would I be trading against the fact that there's all of this generated liquidity above us, all these different things, right? I want to be making sure that I'm aligning with market direction, right? So check this out. This is pretty much a very simple way to look at this, right? These 3 scopes of time frames for the first highest win probability trades, all of these have to be aligned, right? Meaning our 1 hour clearly showing bearishness, our 5 hour has no objections to a bearish trade, and our 1 minute is showing bearishness perfectly on a pullback in its own model, right? Beautiful. The second highest probability is going to be intermediate with execution aligned, but not bigger time frame aligned. This is what tripped me up. I used to take a lot of trades like this right here, where my bigger time frame was aligned and my execution was aligned, but not my intermediates. But the issue there was that the time frame that is going to immediately give you instant feedback, like right then, the second you enter your trade, of whether you're right or wrong for your first few candles, is going to be the intermediate time frame. Over an hour of playing out a 1 minute trade, so you didn't have a stop loss, what's going to determine if your direction is right or wrong? Probably the bigger, right? But since we have a stop loss, and I talked about this before, we have a time-based component baked into our trading by nature. So we need to make sure that our intermediate time frames, which is the one that is closest to governing that time-based component, is aligned with our execution, right? So check this out. Number 2 is going to be that intermediate and execution aligned, but not the bigger, right? Because we can still scout moves in the 15 minutes bullish, but the 1 hour might be bearish, right? Something like that. Secondly, or thirdly, we're going to be having bigger time frame and execution aligned, but that intermediate is not. Why is that? Because we can get faked out very easily if we hop into a 1 hour bearish fair value gap, right? If we're doing something like this, where we have, like we said, a 1 hour bearish fair value gap, and we're showing prices pulling back into it, and our 5 or 15 minute has fair value gaps all throughout this leg, but then I get some type of 1 minute change in the state, and I take this entry, do we think that this is going to play out even though I have fair value gaps here, all this stuff, right? Even though my trade is technically pulling back to fair value gap right here, and I want to see it hold? No, obviously not. Like, what's obviously most of the time going to be happening here? We're probably going to pull back to some type of fair value gap that's sitting right here. We're going to get 10 points into our trade, think we're going to bank group, like, let's go, bro. It's going to be such a good opportunity. And then just like that, we're going to see something like this. Boom, boom. Now our 5 minute is aligned because now we're actually making a 5 minute change in the state. And then we can play around and run low, right? That's what we're looking at. This happens a lot of the time. So we need to make sure that our intermediate time frames are aligned, or else we get stuff like this. And this is how I take a lot of my losses, right? Finally, the lowest probability thing, and this is a trade that I will never ever be taking, right? Maybe sometimes I will be taking this number 3 probability, but I will never ever be taking a trade where every time frame is against the 1 minute chart, but I'm just trading the 1 minute chart because I think the model looks so clean. At that point, we have to use our own conviction and say, while this looks great, it is not the truth, and I cannot trade it because of that, right? So what I want to show you guys now is how a lot of times the final piece of theory that's baked into this is this, right? A lot of times we will be having a bias or an idea of bias, right? Where I think, okay, right here, let's take this for example. I think right here, well, the market's showing me, we have bearish fair value gap right here, and we could go lower. I think we're bullish, right? Because multiple reasons. Maybe we have some type of midnight open right here. Like, I think we can bounce off of this level, right? And there's also a fair value gap. I think this could work. Keyword, I think this could work, right? The next thing that we do logically is we wait for the market to show that our idea is actually the truth of the market. And then we take the trade because the market's showing us it's the truth, right? We wait for confirmation. Okay, now using this, we can determine whether or not what we believe to be the truth and what our hypothesis says is actually true. Why is that, right? Because a lot of the time I'll be taking a higher time frame, bigger time frame based idea, right? And I will be thinking, hey, this looks sweet. We have everything we need. This looks great. Back into the 1 hour for value gap. Everything is perfect. I want to take some type of long, zoomed in, maybe something like this right here, where I'm entering here, waiting for some confirmation. I'm looking to bang this, right? This looks super sweet. So we'll take something like this, entering and looking for this. But the issue here is that this is a number 3 type of trade. That is lower probability because of this. Because our bigger time frame, 1 hour, and our 1 minute entry model affirms it. But the issue is that we also have a 5 minute for value gap against us. So like we talked about before, if that 5 minute for value gap is to hold, what we're going to see is a couple points into our trade, everything's looking great, boom, 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 stopped out, and then price runs. So we need to wait until that 5 minute now affirms it, right? When is the point that we enter? After we see our 5 minute tapped and we see the 5 minute now does not show any kind of direction, then we can use our 1 minute to zoom in and get some microstructure. Or if our 5 minutes still adding more bearish confluence, right? Maybe say we pull lower and we place in another 5 minute for value gap. I can simply wait until I get my 5 minute inverse, right? Maybe even pre-fired on the 1 minute because I'm adding that confirmation just by viewing the 5 minute chart. Then I can trade it higher and look for the rest of this because then all of my time frames are aligned, or at the very least, my intermediate and execution are aligned. You know what I'm saying? So I want to show you guys an example right now of just how great this topic has helped me, right? And for that, I want to go back to, I think this was Thursday of last week, or no, this day right here is Wednesday this week, right? So check this out. Our bias at this point, I'm going to draw in a little bit of a circle just because I want to keep this, marked out. It's going to take this opacity low, right? So at this point on the charts, our bigger time frame, say our 1 hour bias. Our 1 hour bias is most likely pretty bearish, right? At this point, before we see this big leg higher, what we're looking at is price is doing this, right? We're now gapping lower. We're taking this low. We're placing another displacement leg. We're generating liquidity. We now just take it. I want to see some type of flush lower, right? I want to see something like this, where we simply retrace wherever we want to do, maybe super high, and then we just run lower to sell side. This looks super bearish on the 1 hour. Super bearish, right? So now, logically, what people think that you do is you now go to the 1 minute and you take your trade once you get manipulation away on the 1 hour, because the models on the 1 hour trade the 1 hour, right? Logically, yes, you're correct, but watch how this turns into a fall. The 15 minute here, right? We can see that we come up in pre-market, we end up taking this high, right? So now if I'm bearish at this point, what is that high getting taken going to be? That's going to be turtle soup, because think of our model, right? If we're going to be bearish at this point and we want to see our market maker model get completed around this low, every single time we come higher to take a level, we are going to have that as a turtle soup, and we're going to run through that for value gap and go lower, right? So this is a trade that I ended up taking, right? And using this as a lesson. Once I see this, right, market opens and we're running lower, right? I'm like, okay, this is turtle soup. This should be clean. I just have to wait for some type of manipulation in terms of this model now, and we can run lower. So what I do is watch this. I would take, there's an SMT that gets placed in here. I wait for an inverse and boom, I hop in. Nice little confirmation here, changing the state. I take a trade that's similar to this, looking for all of this, potentially more. Instantly stopped out. Why is that? Like what? Like this was so aligned, right? I had my 1 hour staying bearish. I waited for every step of confirmation on the 1 minute. This was so perfect. Why did it fail? Because I didn't weigh the intermediate time frames. Watch this. Our 15 minute shows us we have a huge fair value up there. And obviously this was just a fault of me, completely honestly. Maybe I changed the state here. Like I should have just seen this. But the thing that I'm trying to stress here is that we have to weigh our biases. We have to weigh our time frames. And going back to the chart, our bigger time frame was bearish and our intermediate and lower was bullish. So watching that, what do I then do? I then see our more probable opportunity here is going to be to trade with the intermediate time frame, because the intermediate time frame will either cut me or it will affirm my bias, right? So I'm going to wait for the intermediate time frame setup, and right here, this is the intermediate time frame setup. Right after that, we pull back right to equilibrium on the leg of stopping me out. Like, watch this, bro. We pull back to equilibrium. Really nice. We're back in that for value. Place some type of SMT at that low. Then we make another inverse to the upside. This is where I hop in. Easy bread, bro. Just bang this out, and you can ride this the entire pretty much day, all the way up to these highs and new opening gap to the left of us, right? So I'm showing this as an example of when the intermediate time frame weighs more heavily and is the actual truth over just the 1 hour, 4 hour time frame. I want you guys to take that, look at it, and use that in your own trading and weigh those intermediate time frames a lot more. A lot of the successful traders that you will see in this space use very simple strategies involving the 5 and 15 minute. Why? Because it's such a powerful affirmator or differentiator of which bias is true. What I'm trying to say here with all these great big words, right, is that this 5 or 15 minute will either show you for the next bro, 5 and 15-minute time frames are the shit, bro, because they will show you where we can logically see this bigger time frame model play out to, right? The 5 minute chart is pretty much going to show me my daily bias in a lot of ways, because once you have a bigger time frame bias, I want to see what is holding on the 5 minute, because that's going to tell me how we're actually going to play for the next while in line with our daily bias. You know what I'm saying? So when I see the 15-minute time frame hold this level and I see this candle close with a doji, I'm like, all right, bro, we are going higher here. You can literally use that as a great bias splitting tool and then look for some type of long entry within the rest of this to catch this entire move, bro. What I'm trying to show you guys is intermediate time frames, bro. They hold weight. Make sure that you guys are actually accurately involving them in your trading setups, bro. So once again, I'm gonna pull this up just so you guys can see. This is a concept that has helped me a lot in my trading, and I think it's something that we all need to maybe spend a little bit more weight on. Take a screenshot of this, look at this a little more, weigh it, go do some back testing on this type of topics. Hope you guys enjoyed the video. Thank you all for watching and spending your time learning and enjoying and becoming better traders with me, bro. So at the end of the day, this was a great video. Happy time to record. Hope you guys got some stuff from this, and I'm gonna catch y'all later. So peace out.